So what's up, guys? Let's go. What's up, my snipers? Welcome to the Wednesday weekly webinar. It's feeling like a fam now. Let's freaking get it, guys. I'm super excited to dive into this week. If you guys were on earlier, like we said, we're also going to talk about the month of January, the first month of 2020. So excited to dive into that. We finally finished January. So no matter what, good trading, bad trading, what's great, it's always the next day, next opportunity. No matter what. So make sure you reflect. It's important. That's the way you create the principles, and that's the way we made the sniper plan, the sniper rule book, the checklist. And so make sure you do reflect. You got to reflect a little bit. I'm not going to lie. We don't even, we do take notes, and we do have, Profitly. And of course, we have this Excel sheet, which we're going to share. But other than that, it's not too much deeper. So I know this part isn't the funnest part of trading, but I guess that could be the header and the key to this webinar is reflecting on your trades, because we're going to go back all the way back from the beginning of January. But first things first, let's go ahead and dive into the week like we usually do. If you guys are new, every week we get together and we dive into our trades. And then if you have any trades you want to talk about or any tickers, we dive into those. All right, so we'll go ahead and get started. I got my team with me. I'm Sniper Nick. I got my boy Sniper Al. What's up, Sniper Al?
Oh, what's good, everybody? Sniper Al in the house.
Mr. Hoops is in the house. And then I got our boy Mr. Trump, Mr. Mike T, Sniper Mike in the house. Let's go. Make trading great again. We're trying to make trading great again. Like, there's been nothing exciting on CNBC since Tesla. 2019, 2018. Yeah, we like Kramer. Nah, we're on Squawk Box now, actually. It's pretty cool. Just streaming in the back. But anyway, let's go ahead. Let's dive into our week. Let's talk about our stocks, the stocks that are worth talking about. And first things first, what do you guys think? You want to dive into the week? Let's do it. How do you guys feel about this week? Good year, good week so far. Thank you guys for your support and patience with us as we were getting the site up. And we missed you guys this week, so excited to talk about our trades while we were working on that.
For sure.
Rough week on the business end, but
it was learning experience, like anything.
Yeah, just like anything else. We got a good support team now, so it's exciting to have a new team like that.
Yeah.
But trading wise, very exciting, very, very, very exciting. 2020 has sparked some nice stuff in the OTC world and in the shorting world.
Yeah.
So the two places that you can make a lot of money, which is nice.
Let's go, baby. All right, so check this out. So this is our profit chart for the month. We got it calculated. If you don't follow us yet on Profitly, follow us. It's at the Stock Snipers. And make sure you get yourself one, too. This is the easiest way to track it. Links up with your brokerage account. So, boom. These are our results. We're going to dive into the week, but just these are the results. And it feels good, man. It feels good. What do you guys think? What do you guys think about this month? I mean, what is it?
Straight start. And it's amazing when you guys actually get to see we're not hitting any home runs. We're not making 100%, 50% on any of our gains. It's just really taking the bag when we see it and cutting losses quickly and sticking to those two roles right there. You can be consistently profitable, and you really don't have to put that much money into these stocks to really catch consistency. So, this honestly has been an ideal month and an ideal start to the year for sure. It just shows us, the actual, amount that is, the sky's the limit. When you're making way more than you're losing on, you can put, any amount in there and make as much as you want. So it's been great, actually. So I'm excited to talk about these for sure.
Heck yeah. What do you think, Mike? Bam! I got one thing on my mind. I see 100K. Yeah, it's very, very nice to see. Good time. Not just to grow big accounts, but to grow small accounts. So everybody, let's do this together. Let's keep it going. For sure. It's been a big milestone, like from the beginning, that crazy 100K mark, just to get the six figures. I don't know what it is, but just to crack that mark, it's been a milestone. Even when we were back at 2,500 and then to 10,000, it was always small goals, but the big goal was in picture, and that was the journey to finally get to that six figure mark.
I'm actually
I love
pull
this.
up, also the percent gains as well.
Okay, nice. Wow, this is a good look.
So
And look, you could do this on Profitly as well with your account.
It's really
That's pretty
awesome to
sick.
highlight this. Like percent gains is amazing because, like I said earlier, Alex actually noted it earlier, and then I kind of doubled down on it. But we're not even throwing huge positions like I was saying, and I was saying this is a perfect time to grow a small account because our position size, I mean, 2,500, 3,000 we're throwing right now, but to get 20%, 25%, 23%. That's what you're looking for, really. And then the minimal losses too. Very, very small losses. The biggest loss, 3.5.
No, 10%. Or
Oh,
just random
sorry, I
one
thought that was a one.
at the very beginning.
Sorry. CYTR. We let that one fall apart. But other than that, that is cutting your losses and letting a winner win.
Yeah, that's a good point, man. All right, so let's do it. Let's go ahead and dive in. Good stuff, guys. So I'm gonna go ahead and we're gonna start with our week like we usually do. So we're gonna go back from it's January 29th, and we're bringing it to the present date. And so this is exciting because again, we didn't get to share the experience like we usually do together. So we'll make sure we dive into these ones in detail. And I would say the first one that we're gonna start with. I mean, it was first things first for the week. It was 1, 2, 3, 4, 5 trades, and it was 4 wins and 1 scratch. So, man, I mean, it's you gotta it's a blessing to have these stocks come. It really is, and you gotta just appreciate it. And studying really does pay off. Yeah, exactly. And I think that's the biggest
appreciate
thing.
it and be ready for it. And that's what you're learning. That's what you. Those are the two things you really have to learn. And with that, both of those things comes confidence and patience, and other skills that it's amazing the type of skills that you can develop when you're focused on actually hitting the goals. It's
Yeah.
crazy.
It's deeper than trading.
It's deep. It's deep.
It goes deeper
You
than
got to treat
trading.
it like that. Though you have to actually treat it like
Exactly. If you
something
want to produce
serious.
something out of it, you
Yeah.
got you exactly. That's a good point. You do got to take it, a little serious. You do have to put in a little bit extra work. Like everyone who's on right now, this is it. This is it. Just putting in those little extra reps and seeing what's going on, especially when the market's still. It's we wish it could be live and stuff, but it's great to reflect like this when the market's still and be able to go over these. So I would say the short gun was hot this week, and man, it's like it's an interesting concept because we were long, just going long for about 2.5 years, I would say, right? Basically, just going long and really feeling it out. And at the beginning, I would really say just focus on one side. But we're starting to get versatile and we're going both ways. What's cool is after you go one side so much, you're going to be able to kind of feel out the other side. So always keep that in mind about there's another side, there's a long and a short. But the biggest thing about this is, listen, these stocks are always going to be here. Just the way that the stocks are lined up. The spikes are always going to come. It's just the way the stocks are lined up. So, like Al said, just being prepped for it. All right, so I'm gonna start with our first biggest win, and then we'll start with the $447 profit, and then we're gonna go into VWIS. So I'm gonna start it with VXRT, and that was a short on a first red day, and so I'm gonna go ahead. I'm gonna let my boy Sniper Al dive in on the keys here.
This is one of those coronavirus stocks. VXRT. Where is it? All right.
You can stretch it out if you want now.
One of them. Hold on. VXRT. One of those listed coronavirus stocks.
Yeah.
So look, first of all, look at the year. This is the year. This is a classic Nasdaq stock, as you can see here. It's unbelievable. Having a crazy day here, crazy gap down, back over here, and another crazy dump here, and then finally now recently it's look at what it's been able to do, and it's great to appreciate the movement that these Nasdaq, these listed penny stocks can offer, because this went up from 46 cents all the way to $1.80, which is amazing. In a span of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 2 to 3 weeks, 200, 300%. So it's amazing to see the opportunity that these actually present. But like Nick was saying, you want to, there's always a backside to it. Like all these stocks that do make these great moves, eventually do come back down. And that's just the nature of it. And it's a lot of beginners, and we were like this in the beginning too. We would only be looking to go long the stock, and then eventually it got to a point where we were patient enough where we just didn't get in because it didn't look attractive anymore. But really, at that point is where you should just shift the mindset. If you're really not looking at it long, you should look at it to make it. There is an opportunity to make money on the short side. And we would just take it off the radar all the time. So many stocks that we were watching, it could possibly break out, make another high. It's running. A stock like this is running. It broke $1 and is coming with huge volume. And we would look to buy that breakout, but once it didn't look attractive, we would take it off the radar. So now I feel like we're just keeping it on the radar, and this just comes with being versatile and being able to master that long side, and then knowing when a stock gets overextended, you can make money on the way down. So really, the pattern is you got to keep it as simple as possible, and we call it just a basic first red day, just like we play a first green day when we go long. We like to play the first red day, and you're really just looking for that first sign of weakness after a big move. And look at the move that this had from 46. It got all the way to $1. It dipped back down to 71 cents, and then had two massive days from 70 cents to $1.50. So that type of move is not sustainable for this type of stock. And realistically, they're running on hype, Corona hype. And it's just yeah, it comes up a little bit too quick. And once you watch this a little more, you'll understand. You'll feel it out. But after you see these two big days, it's not that hard to recognize. This is a stock that for 2 days in a row had traded huge volume and massive days, 50%, 100% days back to back after coming from 40 cents a week ago. So this is not that hard to come on the radar, and we really just wait for that first sign of weakness. We've recognized that it has these 2 green days in a row. So now what? It's on the radar, and we're looking for that first sign of weakness. So let me zoom in. I'm going to look into the intraday, grab some 2-minute candles. All right, so.
Is that a bond and Viv? Is that what you call this?
What?
This is how long a bond and Viv. One bond and Viv.
Yep, bond and Viv. Add it. So this is the second big day here. This is the first big green day, really strong day. Came in the next day, had another strong open, and continued to look strong. And at this point, it's like, wow, the stock is really overextended at this time. Before we would look to go long and it wouldn't break out. The next day we would just take it off the radar. But really, you're really just looking for that first sign of weakness. So right now, what you're looking at is this is intraday, and then the light gray is after hours and pre-market. So the stock closed very strong on a second green day in a row, a little bit off its highs at 180, but still pretty strong. But now the next morning, it's already gapping down. All right. So it closed at 165, but it's 8 in the morning and the stock is down at 144. So this is the first sign of weakness on the potential first red day short. And you could see right here, there's a big crack. This is before probably you even wake up. It's already cracked down to 118, which is 50 cents off the high. So this has the potential to crack. That's a first sign of cracking. And then as it becomes, the hour coming into the market, there is where you want to see, all right, is the stock going to come back and actually be able to open up green, or is this going to actually open up red? And that's where, we are very interested. And thankfully, Interactive Brokers had shares available. They didn't have shares available this day. They didn't have shares this day. So it was, thankfully to them that we were able to get shares. We actually didn't get a full fill. We only got 1,500 shares. Yeah, about 1,500 shares. And When we were up, we saw that it was available and it was creating a first red day. So we decided to get in while the shares were available. We figured that this was not going to be able to come back to actually be opening green on the day. So there's no chance it even gets back to this green level at 165 or even gets back to 180. It's going to take a lot for the stock to actually do that. So we got in right here pre-market at 143, and we're risking basically 150, and it would have to prove itself. If the stock opened up and went above 150, we would have to cut our losses, and you have to be prepared to do this when you're buying or shorting in the morning. But this pattern, when it gaps down, it happens so often. The probability is so high for this trade to work out for you. And you have to build that confidence because this play happens, and it's really, really ideal. So we got in and we got a dip a little bit pre-market, and then it opened at 140. All right, so it opens at 140. The stock closed at 165. So you're already gapping down 10%. There is a very low chance that this stock has the strength to come back, go green, and break the highs of the previous day on its third big green day if it's gapping down like this. So when you see the gap down, you got to take advantage of it. You can risk the red to green spot. It has to prove itself. Let the stock prove itself. And look what happened right away when it opens up, it crashes right away down to 125. So boom, we're in control of the trade. We're in at 143. We have a cut. We can cut even. We can cut at VWAP and make money on this trade. So we're comfortable in the trade, and that gives us the patience to hold throughout the morning, and we get good price action, just grinding down to the lows of the day, and then eventually at 11:30 cracks the new low a day, which is a perfect sign. First red day, no retest, couldn't even come back. So really no sweat. The stock really never even got back to our spot where we got in. So we got a great crack right here down to 112, and actually that's exactly where we put the order in right here at 112. As you can see here, the cover is at 112. And that's, you just got to reward yourself. We could have been patient and let this go a little further, but you're getting 22% in 2 hours. And the potential is unbelievable with these stocks, as it's at 106 now. So and we'll probably come down further. So the first red day pattern works, way more than you would really even think it works. So please don't take your eye off of stocks once they start dipping, aka Tesla. Shout out Tesla.
Yeah, for sure. And no, it's key to know that because these stocks, like we said, are always going to spike. So the spike will always be there.
Yep.
You already know, like everyone knows, these stocks are junk. It's like what we usually, you can't invest in these companies. We're literally just trading them.
Yep.
So there's a downside, and the stocks are always going to spike. But like Al said, it's just finding that weakness. When it spikes enough.
Yep, exactly.
We got some on the radar now.
Yep.
We're looking at the short side for tomorrow too. So.
Yep. So that's, we made 450 on this. We tried to get 2,000 shares, only got 1,500 filled. So it was a good trade. Ideal, only risking 5%, and the reward was 20% in 2 hours. So I'll take this all day. This is a, very nice setup, a predictable pattern. And there's plenty more that'll set up just like this. So
talk about the other V1.
The other V1? Oh, VVUS. Yeah. So VVUS is the other one.
Yeah. So this will be
real
the
quick.
Short we'll dive into. And then
this is actually done today. Yeah.
OTC long.
Mm-hmm.
There's this short and then an OTC long, and then we're gonna talk about what's opportunities out there, whatever you guys want to talk about.
Yeah, this is perfect. So the first short that we just talked about was the first red day. That's the first red day pattern, and now this one is, I like to call it the morning spike. You're with this specific type of short, you're really looking for a smaller percent gain. You could still get 20%, but really we're looking for a quick like 10 to 12 to 15%. And that's just this specific style of a short. So this setup is a little bit different than that first red day. you know, we're actually shorting into strength with this one, a stock that is up on the day, a stock that's not creating a first red day. This is normally kind of on the first green day or the second big green day, ideally on the second green day, but you know, sometimes on the first green day, if it gets overextended, this is what we like to look for. So this is a classic example. You just want to be patient. This is a good opportunity where you could go long here. You know, this is a NASDAQ stock. It gaps up and for the first 15 minutes holds its gains and then gets a squeeze past the high of the day here. So this is a very bullish sign coming through the 315 here, and with really good volume. But you know, if you don't catch that, if you're not able to catch that, you could still watch the stock, and be ready for a potential short. And by that I mean, you know, if you're using Interactive Brokers, you know, ask your broker, is there shares available? See what the availability looks like. It's good to know either way, and just be patient. And this was just, you know, also about being patient. But when you see a spike from 290 all the way up to basically $4 in the matter of, you know, 30 minutes, that's the type of morning spike that is ideal for this short. And it happens a lot. This is a perfect, like I've seen this so many times where it gaps up to 2, it comes in this area and then spikes $1 from this morning spike. And that's important to notice. It's not really a stock that, let's say this stock gapped all the way up to 3 and then once the market opened it was dipping. That's not the type of stock we want to short. We're looking for a stock that has that gap up and then holds its gains and then goes another dollar, another 30, 40, 50% in a 30-minute span, which is, you know, it's amazing. It's an amazing run. But, you know, coming into midday, the stock is definitely going to fade back at least to VWAP, which you can see is a purple line here. And at the time, VWAP is at 325 and the stock was at $4. So you knew after this 30-minute run, there was a chance in the next like 30 minutes that the stock could at least retrace back to that midway point, which is around like 350, 330, 340. So into this big move. And also it's ideal when this big move, when you're looking at the long-term chart, when it lines up with resistance. All right, this is another big factor that comes into it. When you look at the long-term chart, look at the spike it had, and then look at the long-term resistance. There's a lot of resistance at 420, 430, 440, 450, 470. So there's a lot of resistance long-term there that this stock probably is not going to break intraday, midday. There's a really high chance it's not, especially after a 30-minute run where it runs a 50%, 60% in a 30-minute span. So it was coming up to that resistance, so we put an order in at 389 right here is where we got in, and we were just really risking off that $4 spot. And these are 1 minute. These are 1 minute candles here. So when you see it here, it's a beautiful move. But you can understand with the VWAP here at 330, this is extensive move right here, and it usually ends up like this. You got the break, you got 1 dip, you got 2 dip, and then you've got the third rip. And that third rip is really that spot where you can scalp a short. And you know, I try to, you know, catch the tops, and you know, it's great. You got to be really, when it's booming like this, it's a good opportunity to really get in short. And look in the next 20 minutes what happens here. You know, it dips a nice 15%. So we just, you know, caught this spot right here, 390, let it ride. It dipped, and we covered right here into this third dip right here, 20 minutes later. And that was it. That was just a quick scalp, $300, 8%. Ideally looking for like 15% on this move, but you know, it is a bullish. You have to keep in mind this is a first green day, a bullish. It had a really bullish breakout here, so you knew there is a good chance that this was going to hold VWAP. But you know, you're just taking advantage. This is a time where, you know, if you were going long another stock, you've played it overnight, you took the bag. This is a time where 10:30 comes around, you can formulate a plan. You have 15, 20 minutes to watch the stock and watch this move happen, and then it comes into play around this 10:30 mark once it makes a big rip. So nice play. We have a couple of these that we've bagged in a row that That'd have been nice. 80 AP was another one.
Yeah,
I think TIGR was another one.
we'll show. We have that. You have that chart.
Yeah, yeah.
All right, we'll show you guys the chart after this week.
Yeah, so that was a good one.
Yeah, no, that was a great one.
Quick and easy,
Good
man.
shit, man.
I mean, you can't complain. $300 in less than 20 minutes. It's fascinating.
And that's what's awesome about it. You know, you got to step back and really take that in.
Not doing
And,
anything. We're just sitting here logically pressing a button.
Exactly, having fun with each other,
It's amazing.
just like chilling in the office. And it's funny, we still do it on the phone. The phone's like our controller.
Great. It's unbelievable.
It's like we're looking at the stocks on the web now. We figured it out, but our phones are the controller ultimately.
It really gives you an ideal lifestyle. You know, you can do what you want to do.
You're right.
It's amazing.
And
not a lot of things can offer this kind of payout with that type of lifestyle attached to it. It's amazing.
Yeah, no, that's a good point, man. And it's, for some people it happens quick. You know, it takes a lot. It does take time, but you put in the work. It all depends on how much work you put in. But all right, we're gonna go ahead. We're gonna dive into the next one. It's actually a long stock. This is one that everyone's familiar with. An OTC stock. It's a first green day. So interesting enough, EDXC was one that we traded way back on our profit chart, going back to when we had $5,000, when we had $10,000. I'm sure we saw it again. We've actually hit a pretty big one on this. This one was a 9% win, but we've hit some really nice ones on EDXC. So this specific one, when it came back on our radar and we saw that it was on the biggest gainers list, on our biggest gainers list, we zoned in from 2 o'clock on. We knew, you know, if it's going to hold, we're going to zone in on this one because it never really gets back on our gainers list. So it's nice to see one come back from the dust and come bless us again like an old cousin. All right, so I'm gonna let my boy Sniper Mike dive into this one. We got EDXC. It was a buy at the end of the day. Let's talk about it. It was really this day, man. And the volume, I think, tells a lot about this. EDXC. So this is a nice OTC cannabis play. These are one of those plays. I mean, the cannabis sector is now completely slowed down compared to how it was, I think, the beginning of the month. But nothing's crazy has gone on, honestly, to spike it. We usually like to watch CGC and Tilray, which is the two usual sector leaders that show any sign. If those show sign, usually the other ones show sign. But at the same time, these are OTC stocks, and if they do make plays that we like, multi-month breakouts with nice volume, we're going to be interested. And that's what this is right here. So this is a 1 month breakout, about a month and a half breakout right here. And it's about second green day. I mean, this is, I guess, the first. Here's the second here. And this is the day that we're playing. So you see a huge volume spike, like Nick said earlier. Very key to notice that. Compared to the past days, not too much volume going on. So for it to get some nice volume that day, really got our interest, especially with the multi-month break. So now let's zoom into the day. So if we're zooming in and we're noticing what's going on, it broke this point right here, which was 10.5, and it was able to break 11 as well. And those are two spots that we'll notice the next day, or when we zoom into this day. And you always, which I didn't do at the way beginning, you always like to zoom out to the 1 year or 5 year, 3 year, how far you want to go. But it's always good to see that this certain spike that you're looking at has spiked in the past. Or it's a certain stock you're looking at, it spiked in the past. And if that's happened, which it has happened multiple times, here, it can happen again. So that's why we always say never delete any stock off your watch list. Keep every stock on your watch list. And right here, look at these multiple day runs. It can happen anytime. So always keep that on watch. Even though it had a red day, it could still happen. We'll have this and we'll keep watching it. But now let's zoom back into this day, what we're going to talk about. And guys, this is just a good position. Wasn't a crazy gain like we were talking about at the beginning. It was just a good position. We weren't chasing anything. We were going to get this spot. And if we didn't get this spot, we weren't going to chase it. And we knew we wanted to sell it the next day. We also know that these stocks, OTC stocks, if they don't have a hot sector, they don't have a lot of hype around them,
they have big possibility of dropping off the next day. So that was another reasoning of selling it instantly. But let's go into the day and kind of zoom in so you guys can see what exactly happened. We got the OJs, Human Money in the background, and let's get it.
This shit is money.
This is good. So this is the first Green Day we talked about right here, guys. This is no news behind it, so no crazy catalyst, but it is a multi-month break, and it is an OTC stock. If you're just starting, I would say delete everything else out of your category. If you really want to be patient, and just be patient for OTC multi-month breakouts, and maybe have that your first pattern and see what you like. We learned by throwing tons of darts, and this was one of our patterns that we liked the most. It grew our small account the most. So in our advice, we think these are the best. Everybody's different, so if you are better at something else, I'm not talking down on you, but that's what we recommend. This is what just for a smaller account.
We work on so many strategies
that has under PDT. You're not worrying about pre-market or post-market fallouts, anything like that.
Stress free while you're at work.
So here we go. So right here, sorry our chat was down, but if you were in the chat, we usually don't play stuff in the middle of the day, but it did get a nice spike all the way into the middle of the day. Now remember the two spots I talked about at the beginning of this trade was 10.5, which is right here. It was able to break. That's a shitty break right here with the spread, so no interest, not too much interest there. 11 was the next spot, and that's right here. And as you notice, once it breaks that spot, it gets a nice pop. So that's where we're interested. We like that it broke that multi-month spot of 11. We like it got a nice pop, almost to 12, so almost a cent pop. And we're going to see what happens midday. Midday, nothing really going on, but it is creating nice support. So we like to notice that 11 spot that it broke is support. Really key thing to notice that we like a lot is if things that break multi-month spots are able to hold that and make that a support, that's a good sign. It usually does go up. And in this case, it does hold that multi-month break and it does go up. So this does, the myth is true in this one. So we decide to get interested usually after 3 o'clock, which is 15 for those who don't realize it. 15 o'clock is 3 o'clock. That's when we're interested. We know it's holding 11. We see the bid at 11.4. It was a little spread at 11.1. But right as we saw it come up and close a little bit, we like that price action. We like the hold. We like the risk spot. If you're buying at 11.4, you're risking 11. That's not even 5%. So you're barely risking anything. You're barely risking anything in this situation. You got to try to go for these situations. These are the kind of ones you want to get tight ranges that have good opportunity, have upside like we saw on the 1 year chart. So good tight range. Once it closed up, the bid and ask, we slapped the ask right away. And good thing we did because it got that pop instantly. It filled us and it popped right away. So once it filled us, we were the last ones I think that enter, and then it instantly popped about 2 seconds after that, and we got a nice pop too. When these things get popped like this, they usually can go, especially after 3 o'clock. So in this situation, I did think it was going to go a lot more. I think we all did. But at the same time, we know what the high is now. It was able to reach 12.85, so almost 13, all the way down from 12. Our old cut spot is now 11, and we're all the way up at 12.85. So we're in good action now in the first 5 minutes of us being in this stock. So for us to have this action, we're not nervous anymore. Big part about being patient, like Alex was saying earlier, and it comes with the more you trade. When this stuff pops up, and you can take this bag, and it is a nice quick bag, but at the same time, it is a nice cushion as well. And you have a lot of time later. A lot of these times, they do make another support, and then they keep going. And in here, it does create a new support. So we like that. And we're hoping it's going to break out in the last 30 minutes of trading, or last 10 minutes of trading, sorry, and make new highs. Unfortunately, it doesn't. So that was kind of a red flag for us that it didn't pop past new highs. But the fact that it didn't break back down to 11 or even break 12 was gold for us. So we like the sign that it's still holding 12, especially 11, which was our original cut. But 12 now is our new cut as it created some support there for the last 30 minutes. And we're hoping that it breaks high day the next morning. But there is a red flag. Remember, this is an OTC stock with no news, and there's no hype around the sector. So these things can fall out. You always want to be aware. And if you're up in these and they don't wildly gap up, no hot sector, no news, you usually want to take the bag. So we already had one red flag. We weren't getting a gap up here, and we weren't getting any news or anything. So we were going to stick with that 12 cut. That was just going to be what we were going to do. And the first, now we'll zoom into the actual day. So no movement, OTC, aftermarket. It did get that last minute sell below 12, but it was weird. And then the bell opens right away. It opens, it goes to 12.7. So we get some nice action, but then we get a weird range. So we get a 12 to 12.7 range. A little uncomfortable for us because that's about 5% of a range that it's jumping back and forth. Since we're already up, why not take the bag? You know, you see $200+ If you feel uncomfortable at all and you think something could drop out and you could lose $200 instead of making $200, why not make $200 and move on to the next? So in our situation, why not? We just we just take that bag. And in this situation, it does go up more. You could have made a little more money, but here it is, right here. We decide to sell and take that bag, not worry about it falling past that 12 and really going back to our 11 cut. And look at that. If you did stay in, congrats. You were able to continue and go to 134. It did drop out at the end of the day, so I hope you sold. But still, guys, no need to be holding all day. You know, take the bag, take the money and run, just like Steve Miller Band. And that's 250.
That's our theme song.
That's 250
and this
$3,000 I think we used, so almost 10% we made on that. There we go.
Let's go.
Let's go. Very simple. I mean, if that's a hot sector, that's going 16, 20, 30% right there.
Oh my gosh, if that heats up, yeah, exactly.
Because that's all nice volume there for a slower sector.
I mean, just really any OTC. Once we see any kind of movement, now that we're paying attention to all kinds of news, we see anything in OTC land, we're gonna be on top of it. We thought, maybe
There's going to be a new sector.
the Chinese virus might hype things up. It really only did it to a couple listed stocks. It wasn't that crazy. There was an OTC stock that mentioned it that I was on top of, but it didn't get any volume, and we didn't get the group of OTC stocks that we love. Like we know about these cannabis stocks. That's why we love these ones. They're just our familiar. They're the ones that are right there. But all right, so that wraps it up. Good shit for the week, boys. Good stuff.
Hey.
Good stuff, Al. All right, that's a great recap of the week. Again, if you guys have any questions, reach out to us.
Pop up
You
soon.
can
Be
put them in
ready.
the question
We'll
box.
always be hunting.
But we're gonna go ahead now, and I'm gonna let Al break down our month of January. Like I said, since this is the last, or this is the first webinar of February, we always like to recap the month before. So we started with the week. Now we're gonna go ahead and give a quick recap of the month, and then if you guys have any questions at the end, we'll make sure we dive in. So here, Al, take it away, my man. This is pretty awesome.
Yeah, I just want to show you how you
Going with the music.
Nice, boys.
it's good to just keep this. This will show you guys exactly how you should keep track of your trades, and it really you just have to do it. Your losses have to be there. Your wins have to be there. You have to look at what you're good at. Look at what is working for you, and just really stick to that. So it's been nice. January we made 3,000. We're already up 1,000 in February, and let me just dive into January, and this is how we have it set up here. So we just have the trade, how much we actually made or lost from the trade, the dollar amount. We have the setup, which is we have a key over here of what the setups are. 4 main setups are. We have the first green day. We have a year breakout, which could also be a multi-month breakout. And we have the first red day short, and then we have shorting into the morning spike. So we have the setup, what type of setup it is, the actual stock, and exchange. This is big if it's OTC or NASDAQ, just to see where we're at, mostly trading, and then the win percent. So how much did we actually, what percent? So we have the cash amount and the win percent right here. And then over here, we have the win percent broken down by each setup. So first green day, how many times are we winning those for the month? etc. So, and then also here we have the average win. So based on all the stocks that we traded on the first screen day, we were actually losing money on our first screen day setups in January, which is
Interesting to
it's
see.
interesting to see, but it's okay.
Mhm.
It's totally fine. But
I think one of the biggest things for that, and like first green days usually give us the nice gap up. It's just they're not holding right
we've
now.
had some, yeah. It's just about been.
So
It's,
we have to cut.
some of them are not holding, so it's
We may
tough.
take a little quicker bags on first green days on these gap ups because they are still getting gap ups, just not as
Yeah,
big.
yeah,
One and two,
no follow through.
not there hasn't been for these at least so far as our OTC setups, the ones that we like, you know. So, dude, this is good stuff though.
Hey guys, listen, all of these trades here, we didn't put more than 3,000, 4,000 maximum in any of these trades. So, maybe you're not at that level, but you know, if you're even if you're putting 1,000 or 1,500 into each one of these trades, you're really just aiming. This is an ideal month to trade, 15 to 20 trades and to win 70% of them.
Yeah.
Only lose 4 of them, and only one of them really come out of plan. This is even with one getting out of plan.
Yeah.
And really, like I always say, what moves your account, what continues to grow the account are big wins, and this is what you're looking for, a win right here, 20%, another 20%, another 15%. And a 30%. So if you just have a handful of those, if you have a handful of those each month, and you're taking care of your losses, you're cutting them appropriately, I really do promise you are going to grow your account. It doesn't matter what size you're putting. If you're putting 4K, if you're putting 1K, or if you're putting 6K into each one of these trades, as long as you're hitting your goals, hitting that 15 to 30% target a couple times, 4 to 5 times a month, you're going to be good.
Exactly.
You're going to be good. So you got to believe in it.
Start off slow. And like this is a great sheet. You can feed off this, literally copy directly from this. And with the setups, these are just our setups. We see Sniper Jared. He's doing multi-day breakouts.
What you found,
So
start logging in general what you're trading,
yeah,
and then put it together to see which ones are working.
Love that. Good shit, boys. Good stuff this
So
month,
yeah,
man.
it's been great. Great
Good
start
stuff.
to the year.
That's been
Great
good.
stuff,
Let's
boys.
continue it.
Good stuff. Yeah, we're gonna make sure we're coming
go!
in the year, guys. All right, so we'll take any questions if you guys do have any questions or any tickers you want to talk about. So this is good. We'll start with Jared said VVUS was the perfect gap and crap reversal. I
Yeah,
upset
that
I
was
didn't
nice.
see it. Only good play all day. Exactly. That's what's
Yep.
awesome about it. Even on slow days, there's ways that you can capitalize.
Yep.
The next question, it says, can you walk us through the process of shorting step by step? Brokers, how to buy. Oh, this is awesome, Christina. So she wants to know what broker, first things first. That's where you would start. How to buy, how to cover, and then do you need 10 times credit?
Yeah, great question, Christina. So we use Interactive Brokers is the broker that we use. It's a very friendly, user-friendly broker. There is no minimum. You can put as little as you want. Really, you can put $100, I think, in the account if you want.
Yeah.
What else is so how do you buy? How do you cover? So it's literally the opposite of when you go long a stock, if that makes sense. So instead of the first thing you do when you want to buy a stock, you buy it. Instead, when you're going to short it, the first thing you're going to do is sell it. So you're going to sell it. You're going to put a sell order in. That's going to start your order. That's going to start your position.
It was hard to grasp at first, Christina.
It's just the complete opposite. So you're going to start your position with a sell. And once the stock ideally goes down, you're going to buy it. You're going to put a buy order in, a literal buy order, like you were going to buy the stock, just like other people who are buying the stock at that price. You're putting a buy order in, but just instead, you are covering the shares that you borrowed when you sold the stock previously, and you're going to keep the difference, and that's the profit you make on it.
That's awesome.
So
what about 10 times credit?
no, you know, so the Interactive Brokers has a little issue with penny stocks. They like to see your account have a lot of liquid cash. So there is, I think it's like, I don't think it's 10 times, but I think it's like 5 to 7 times,
Yeah.
or maybe only 3 times they
We
want to
really
see
don't
your
want it too
account.
much
Yeah.
lately.
So I don't really recommend shorting under $1, especially when you're just starting. It could be risky.
Mhm.
So as long as the stock is above $1, it's say sweet spot $2 to $5 a share, you'll be fine. You don't need to have 10 times credit on there. So
Nice,
check
man.
out Interactive Brokers. You can create an account.
Good stuff. Yeah, that was a good question.
Let me know
Tina.
if you have any other questions.
For sure. And I think one big thing with Interactive Broker is also their customer service is great. Like they
Yeah.
always answer.
24/7, they're there. They're helping you out. So, and their mobile app is getting better. So check it out.
Yeah. All right. So let's see. Johnny said, "What up, snipers? I'm glad you guys are back and running the show. If you guys got time, you do a quick explanation with MSIG. The stock had a good volume Monday. Do you guys have an idea for the reason the gap down?" That was an interesting one, and it's crazy because it really isn't an exact science. This is really rare. What happened with MSIG? I know what you're talking about, Johnny. So we'll pull it up real quick. So first things first. This was the day that he's talking about, and as you could see, like these usual OTC breakouts, you see a nice push, and it does get a nice push over that breakout. As you can see, that 7-8, looks like 7-9 spot, right? And if you dive into that day, to that specific day of MSIG, so it goes, first we always like to start from the macro, the big picture, and we see that it's breaking out. So let me go into now this day, and let's see what's going on here. All right, so this is the day, and Johnny's talking about this gap down, which is interesting because it's a first green day, and no, it's not a first green day. Sorry, it's a multi-month breakout, right? So what are some factors that can help you, avoid something like this? First things first is 7-9 was the breakout, right? So that's the key spot, and it looks like it ended up getting a nice rip over here from 7-5. We weren't too interested just because of how light the volume was before that. But when we gave this nice push, it was interesting, and as you can see, it is holding 7-9 here. So with MSIG, the reason why it wasn't on our radar, it just was the volume in the morning wasn't impressive at all, and this really is just like a fluky spike. We liked that it was holding 7-9, but it really, it was, and as if you were trading this, you were able to see that during power hour, it wasn't trading as active as the OTC breakouts that we love to play, right? What's nice is with the OTC breakouts, they do have potential to skip, but you always want to judge what kind of pitch is coming at you. First things first, and we know this OTC breakout, that's the pitch. But two is how hard the pitch is coming. And with this one, this was going to be a tougher breakout because you run down the checklist, and yes, on the 1 year, it is showing that it's going over that 8-9 spot. However, if you look at the volume, it's not as good as this day. It's not as good as this day. It's not as good as this day. For the multi-month breakouts that we love, we like to see strong volume, right? So that's one key thing that you got to look into with this breakout. That's one thing that you can recognize right away. What's nice is it still was trading over the average volume, so it still was on our radar. We were watching it, but check this out. It held 7-9. The only really good spot would be 7-9 with the VWAP cut. Other than that, this being such light volume, it'd be tough to trade on to slap it, right? We have a term that we call slap the ass, and that's when we love the stock and it usually happens at the end of the day. And with this one, we were hesitant to slap the ass because it looked just so illiquid that it looked better to just grab it on a dip, and it really never gave us a good enough one. This VWAP would have been nice though if you did grab it around that breakout 7-9. But check this out. It gets a push, and a lot of the times with these breakouts, if it is light volume, it still could get that push at the end of the day. And there's nothing wrong with rewarding yourself. Sometimes, if it's a good enough push, like with this from 7-9 to 8-8, that's a little over 10-12%. But if you did hold because you slapped the ask here, completely understandable. You just have to recognize the situation the next morning. And the situation was if it gaps down, you're cutting because that would be our plan if it's gapping down after all that light volume push at the end of the day. And as you can see, it did gap down. It ended up getting a push the first minute, so you could have recovered if you grabbed it.
but you literally only had 2 minutes to recover. So it was a super tough play. This wasn't an OTC breakout that was right over the middle for a home run. This was one that was coming in from like Roger Clemens as a fastball.
I'm gonna tell you why.
Yeah, break it down more.
No, listen. We always look at the macro. So look at the macro real quick, and you have to recognize the situation that you're getting into. The stock was at 2 cents 2 weeks ago. We're talking about over 300%. This is actually the third breakout, or
That's a good point.
so this was actually money when it was breaking out
What kind of
5
breakout
cents.
it was? Yeah, exactly.
So recognize what you're getting into. This was just on a fabulous run, a 200-300% run
That's a great point.
in a week. So it is breaking out again, but you always keep in your back of mind, this is that third breakout. So if you do get any type of weary type of price action, you're gonna get out. And also if you don't get a good spot to get in, that's why Nick was saying at 8, yeah, it looks good, but you don't want to chase too far above that 8-cent spot because it is overextended already as it is. So
Yeah.
but still, it closed strong. That was a weird gap down.
Yeah, that was very odd
That was
still.
pretty strange. So I can only think that's the reason for that is because of how much it's gone up so much in the last 2 weeks. So it's important to look at that.
Yeah, dude, good stuff. And the biggest part is like controlling your risk. That's what we're here for. Is you're exposed to risk when you're getting into these trades, and it's about managing those risks. That's the biggest key to this. And what's crazy about MSIG is this one didn't go your way at all if you got in, but you could have got out, without too much of harm.
Yeah.
So at least that's there for you. As long as you're strict to your plan, you could get out with almost no harm or barely, a scratch. But if you held on, then shit gets crazy, and that's when you're like, oh, am I a good trader? I don't know what's going on. Just stick to that plan there.
Yeah.
All right, good stuff. And then lastly, we got our boy Adrian. He said I played BBUS, but my entry was too early. Got out because I had to go to work.
Damn.
Hey.
It's all good. It's all good. Play it safe.
Your situation.
Play it safe. Yeah, exactly.
Good to see another one.
Situational trading.
Realize what it is that's going on.
Better than getting fucked by it.
Yeah, for sure. Way better.
Yeah. You don't want to risk that kind of bullshit.
Good stuff. All right, guys. I think it wraps it up, but we got a good group on here, so I think we might have to do a raffle.
Okay, let's go.
Let's go, boys. Raffle vibes. And we're getting Chipotle after this. This was a good webinar. Good month. Let's go. All right, so we got the hats. Mike's drawing all the names out. He's just finishing up right now. And we're gonna go ahead and do the raffle. So, guys, if you're on, you're eligible. And if you do win, just make sure you send us your Instagram or Instagram us, Facebook us, or Twitter us, one of them. And we're gonna send out a shirt, sniper swag, some sniper swag. Yeah, it's swag. You'll get a surprise. So here we go. Mike's breaking it down right now.
There we go.
Let's see what's good. We grab his hat.
Who's the winner?
Let's go. So you heard the rules, like Nick said. Make sure you guys send in your stuff, man. I think it was like one time where no one said anything. I was really disappointed.
Send your information.
Oh, we owe you, whoever that is.
Yeah, we do it. Ready?
All right, let's do it.
Let's get some Little Wayne on. Come on.
New Wayne.
Who we got?
Man, Henry S. Henry S. Nah, I don't think so.
Let's go. All right, guys. Shit.
Sorry about that. The tree might have went out, but all right, nice. Henry, if you heard that, send us your Instagram or Twitter, and we'll make sure we get the sniper gear out to you right away. Other than that, much love, team. Thanks for tuning in, like always, and we'll be in the chat early again tomorrow. Yeah, we're actually there tomorrow. Yeah, exactly. Let's go. All right, boys. All right, good stuff, guys. We'll talk to you guys later, snipers. See you tomorrow.